Hello, good afternoon, good evening. I hope you are having a beautiful Sunday. This is Free Trader. I'm coming to you one more time. Please subscribe to my channel and hit the like button and comment below. Thank you very much. This is Free Trader one more time. Today I'm bringing something to you. Rectangle patterns. How do we trade rectangle patterns in the stock market? I will focus on that in this presentation, and we will get into it quickly. Stock trading basic pattern in technical analysis. The rectangle pattern, that is what I will talk about. I'm not going to waste your time. Let's get into it. A rectangle pattern represents indecision, uncertainty. There's no decision. So the resistance and the support are horizontal. The price can drop at support or break out at the resistance. That is the main thing that you have to notice about a rectangle pattern. The resistance, the support in the red line, the resistance in the green line, they are all horizontal. So the stock can break above it or break below it. It can get out of the triangle. That's what I mean. So the probability ratio is 50-50 for me. In general term, I think it is 50-50. It can break above or it can break below. But the rules, when we follow the rules, 70% in the direction of previous trend. If the stock is coming from this trend down, is going upward, 70% it will break above the resistance. When the stock is in downtrend, 30% it will go downward. That's how the a direction work. So how do you use them actually? I personally use them in a short or long trade depending on the momentum up or down. That's something that we will get into it, and I will show you how to trade rectangle patterns. They are very, very useful, and they are the secret of trading. Once you know them, you will be patient and you will get your money out of the market on the daily basis, and no one will know about this because you know something that they don't know. And I'm teaching you something simple. If you can learn this rectangle pattern, you'll be profitable in your trade. 90%, I'm telling you. Just watch me and you will see what I'm talking about. Let's get into it. That was my YouTube channel, but it's okay. I'm gonna show you something right here, and you will see how patterns, especially rectangle patterns, they are really, really, really useful. In the morning at 9 o'clock, this stock gap up and it gap up, then it had this trend. There's something too that you have to know. Stock don't they don't usually trend. The momentum is hidden from people. That's why many beginners they find themselves in a range. The triangle pattern is a range. It means that the stock have been hitting the same resistance, is coming back at the same support, is in a range. So do you trade a range? I would tell you no, you don't trade a range, because in a range is indecision, is uncertainty. You don't know what will happen next, but you want to see the trend before you get in the trend. That's what people, many beginners don't get, and that's what make the trade very difficult, because the trend is your friend. This stock came to this level, right? And it hit this resistance and came back, dropped below it. You see the green, the yellow line, or the line, yeah, the green, the red line that draw. This stock has been in this range. Then it broke below it. Then it didn't go further. Then it went up again. It get in the same range. This is CVS, okay? It went in the same range. It was trading the whole time in a range. Then it dropped. It trend in the range again. Look at the support. Look at how this stock is respecting that support. Then it get back into the previous range. So see what happened. It got a volatility quick. Then it get out. This is what make you money in the stock market. Once you are watching a stock, you got your support, your resistance level drawn. You just keep watching it. And once the stock get out of hand, once the momentum is there, you get in. And with your risk management, look at the look. Look at this stock. It went up with a volatile move, then it come back. That was the momentum. Then it dropped again. It came back in the range. It means that the sellers, the buyers, they are controlling this. They don't want it to get out of hand. They brought it back in quick. You see what I'm saying? It did the same thing here, then it came back in the range. So let me show you. Now the stock drop below and get back in this range, this rectangle range. That's what I'm telling you. If you look at stock, you analyze stock most of the time, stock trade in range. And if you are trading them while they're in range, you won't make money. You won't, because you are not catching the trend. The trend is what make you money. So let's see the stock. The stock was going. Then what it did, it dropped below the support. This is when you want to catch it, when it is going down. Then it formed this flag pattern. It keep going down till it stop at this level. Once it stop, it start moving upward. You could have drawn some of your trend line too, but I didn't do it. I just want to focus on the main thing. So if you have been watching this stock for the whole time, this is the signal point to get in. The rectangle pattern, you don't want to be in because you don't know when the stock will get out of hand. So you wait till it get out of hand, get out of the range, then you take your action. You get in. You put your stop loss just above the bar that you bought. And if this is short selling anyway, it's not a long short. It's not a long play. It means that you are not buying it for the stock to go up, but you are short selling in here and you'll be making money. If you don't know about short selling, I made some video. Go please and watch those videos. So the stock came back. It came back in another range again. So it was doing this range. It was in this range the whole time. So if you are beginners, oh, this is where beginners want to buy the stock. The trending buying stock in a rectangle pattern is very dangerous. Is uncertainty. You don't want to be in. You want to see the stock make a move. Look at what the stock is doing. If you follow this will change your trade. I'm telling you. So the stock get out of the rectangle pattern and see what it did. Poof, 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 poof. The whole thing came down. This is when you make money, right? You don't stay in the range because the range you don't know where the stock will go. As I said, you want to look at the pool where the stock is coming from. This stock is coming from the upside, but it continued downward. That's why I don't respect where the trend is coming from. I just want to wait and see where the stock will go. I don't actually predict. I wait till I see an action and I act according to what I see. This will change your trading style. I hope you have learned something. And the thing that you have to keep in mind is when a stock is in a rectangle pattern, you don't want to mess with it. You want to see it get out of its zone and you take an action. That is when you make money, and that will let you make money at 90%. When you're a beginner, it's hard. You don't know when to get it. The stock is stable. You think it's stable. Once it becomes stable, you don't know the next move. So you have to wait for that next move and take any action. Once the stock is moving, that's when you want to get in and make your money. Have a beautiful day, and I hope you have learned something. Bye bye.